Okay, is the screen up and running? Excellent, excellent. So how's everyone doing today? It's been, what, almost a month now that I've seen you guys here again. Anyone new here today? All fine. Pipping Gold and Aussie. Good, good. MD Sabir Ahmed, new, okay. Israel SRULY, new, okay. Good, good. John Cardenas. All right, so we got some new people in here. All right, so the topic of today is basically a recap, yeah? I'm gonna do a full read. Let me turn that off. Yeah, so the topic of today basically is we're gonna do a full recap. It's gonna be in two parts. One's gonna be now, and the next one's gonna be next month. And it's basically to go over a lot of the things I've covered over the years on FXStreet so far. So, how many of you guys have been to my webinars before? Yeah? Okay. So there's quite a bit of you guys there. Okay. Watch them all. Okay. Okay. Excellent. Excellent. Okay. Has it been useful? Has it been useful? Have you guys been able to use the knowledge, apply it? Good. Good, good, good. Yeah. So that's one of the things I like to see a lot. I really don't like people just coming in, they're sitting in, they're just listening, and then they leave. And not really applying stuff. I like this to be a two-way thing. I'm always here every month with FXStreet to host with you guys, and I'd like for you guys to go try the stuff, come back the following month, and then if there is lots of questions and stuff, bring them up. We'd love to cover them. So maybe we can make one of the webinars after this full recap is done as a Q&A session only, where we can go over some of the common questions and concerns. I'll collect all the common questions from you guys that are coming into my emails, and we can cover some of the stuff and you guys have questions about after applying them. Because remember, learning it is way easier than applying it. Okay? Same thing even for a mentor. Even for people like me. Teaching it on the screen, easy, piece of cake. But when you go to apply it, it's a whole different world. Okay? So it's very important that you guys attempt and try what the material is taught. Okay, and then you'll know the real power of the knowledge that you've gained. Okay, so need some webinars about entry. Okay. So today we're going to be doing a just a recap on the technical stuff. Okay, I'm not going to go over the psychology stuff. Okay. So let me open up the charts. Entry and exits. Okay. Let me open up a single chart. Okay. Nice and clean. Okay. Do you guys like any specific pair? Anything that you guys prefer? Okay. Pound dollar. Okay. start with USD CAD, as that was the first one that came up. Okay, so right now I'm on the 240 chart, which is 240 minutes, also known as the 4 hours. Okay, so we're gonna do recaps here. We're gonna do pieces by pieces with what is support and resistance. Okay, while I go up to draw it, I want you guys to also attempt to tell me what you think support and resistance is and what is valid. So we're gonna do it a little bit interactive, and we'll make it a little bit like a quiz as well. Okay. All right. Here's the first question. Is that support and resistance, or is that support and resistance? Is it the longer line, or is it the shorter line? Okay, and here's one more. Here's a third line. Okay, which one is it? The zone, the whole area there? Okay. So then are we saying that this area is flat, or are we saying this area is slightly up? Which one is it? Okay, flat. Railroad track. Support and resistance always flat. Okay. Okay. Is the sound okay for everyone? You guys can still hear me? Yeah? Okay. All right. So, what's a trend line? What is a trend line? Let's first understand that. Let's get into the information of what is a trend line and why. What does it mean? Okay, we'll get into how to draw it in just a second, but what's a trend line? Why is that so important? Dynamic support and resistance. Okay. Okay, so in terms of a trend line, what are we trying to do? Okay, if I go like this, do I draw it from here to there like that? Do I draw it from here to there like that? Okay, yeah, Eduardo, that's correct. It shows us direction, right? Trend lines also have a sense of giving us a flow of which direction the markets are headed as well. Okay. Pan on fire, most recent 2 pivots, yeah. At a swing, Israel, that's even better. Yeah, if you have a swing and you're connecting the swings, they're even better. Series of higher highs and higher lows. So that's also correct, but that works only one-sided, right? If it's an uptrend line. If it's a downtrend line, the situation changes, right? Okay, so now, one question here. What's the difference between this and this? Okay. We'll make the second one purple. What's the difference between the orange and the purple? Okay, if we put them together, yes, it's a channel. But you see how one only measures support, one only measures resistance? Yeah? And what happens when you have a situation like this where the support rises and rises and rises? What does that mean when the support keeps rising like that? Uptrend. Okay? And what does that mean when the resistance keeps rising? Also an uptrend, right? Okay. So, what are the two pieces we need for an uptrend? Higher highs and higher lows. Good. All right. So always remember that if the market has been going down and down and down and down like this, and then suddenly it just goes bloop like that, is that an uptrend? No, we don't know that yet. You know, this could just be a pullback to continue down. Okay? But for it to turn into an uptrend, we need to see a higher low hold and to perform a higher high. And that's when we know, okay, the markets are attempting to turn. Okay? Buyers have stepped in, right? Okay. So, pull back until a lower low of previous swing is not broken. Okay. Also well put. Okay, now focus here on one thing. How much detail is it important for for our eyes to visualize? Do we need to focus on detail like this? Okay. The low got higher right there, and then it went higher again right there, and then suddenly it broke the low, it came lower right there, and then it came lower right there. Is that the detail that I need to know if the markets are going up or down? The whole picture? Okay, so now when we say whole picture, now watch very carefully. Is this the detail? This low went lower to this low, went lower to this low. Is that the detail of a bigger picture? Okay, there's the next thing, next question then. Or is this the detail? Here's the low, and then here's the next higher low. So, is it an uptrend from the orange lines, or is it a downtrend from the purple lines? Okay. Yeah. Yeah, I like how you guys are answering that towards the end. You guys are saying both. Israel, very good. Big picture is up, and also depends on how you look at it. So the very first thing is with all this information is if you use it at a technical level, you can actually bring in as much knowledge as you want in technical, right? It's only gonna get confusing. Okay? Either you look at this minutia stuff, the small purple lines, you look at a slightly bigger image, the bigger purple lines, or you look at the flow, which is the yellow lines. The whole point comes in from what time frame of a trader are you? Okay? When we look at the bigger yellow lines, Okay, we might be looking at multiple time frames. We're looking at the bigger yellow lines as, okay, that's a daily uptrend, right? Because the time it took from there to here, a month passed by. But the time it took from here down to here, it was like half a month. And between each swing, even less. It's like 1 week. Right? So how often do you guys trade? Do you guys trade at least 3 to 5 times a week? Do you guys trade 3 to 5 times a day? Or do you guys trade 3 to 5? Kind of trader you are needs to be known. Once you know that, your eye will understand what kind of visuals do I need to keep track of. Okay? So let's take a little poll of how often you guys trade. So can you guys let me know? Is it like Israel says you guys trade several times a day, several times a week, or several times a month? Scared no trade? Okay, okay. Several times a day, depending on your pip target, entry and exit may be different, of course. 2 times. Look at the 2 main sessions. Okay, here's the thing. Here's the thing. Here is the thing. Watch this. Now, from this purple line to this purple line, it's one entire swing. Okay, I'm gonna make it like this. Here we go. That whole movement there took a week. Okay, so if you grab that movement, okay, we're just going hindsight now. We're not going into any details, but just the sake of understanding, today's recap is who you are has to reflect what you're looking at. Okay, then all the knowledge I teach you can be brought into perspective. Okay, so this yellow line that I just drew is a week's worth of data. Okay, if you stock it in such a way and you grab it, that is a week's worth of information. Okay, this whole thing here is like a month's worth. Okay, so based on what you guys are telling me, this big flow, yeah, it's good to keep an eye on it, but it doesn't apply. It doesn't apply. You're more concerned about more stuff like this, where let it finish doing its pullback so I can sell it again. Since the trend is down, right? Lower high, lower low sequence. Okay. Now this is for those who want to trade 3 to 4 times a week, like Okita or Gene, 3 to 5 times weekly. This is your trade. Those of you who want to trade a couple times a day, this is not your trade. Your focus now goes into the inner aspects of these things, which is these smaller purple lines. That is your trade. Everyone with me on that? So, for those of you who are trading it on a daily basis, a couple times a day, yes, it's good to know these big yellow lines, just to be aware of them. But do you really need to put lots of time and effort and energy into that? No. If target is 14 to 25 pips per day, trade both ways. Okay, here's the thing though. If you're a 4-hour trader and you're trading this whole movement, what kind of pips are we looking at? Looking at approximately 300 pips for USD CAD. Okay, here's another one. Here's another 4-hour movement here. 239 pips. Okay? Now, there's a difference between this and trading it on a daily basis, because if you're trading it on a daily basis, you're not looking at that much pips, because you can't get that much pips out of it. That's the first push, which is barely 100 pips, and it takes a day. Okay? And then it gets subsequently smaller and smaller. You know, always the first push generally tends to be the strongest. And if you get in on the next one, okay, and next one, and next one. Oh, remember this. The market moves in a sequence of what we call legs, right? And the theory behind it is the first move happens. Okay, let's put it to you this way. Let's put it to you this way. By when do you notice that this is a downtrend? At what point do you notice that it's a downtrend? Lower highs, break of uptrend line. Okay, all this information, right? The last purple after second purple. Okay, so this is very good information here. The break of the uptrend line, that's a very good information that, okay, maybe the downtrend has begun here. But notice how this can also be subjective. If I just go like this, the break of my uptrend line happened there. So my downtrend probably began from up here, right up here. Or if my trend line is like that, then my downtrend begins from somewhere here. So also a little bit subjective there, but it's somewhere in that area. Some people are saying the second purple line, which is this one here, it's like, okay, now that it's made a lower low, Boyki, this is this year, 2015. This is actually very recent markets. Okay, this is in June. Okay, so if it broke lower lows, they're like, okay, lower lows, lower highs, downtrend. So here's the concept of it. The first push that comes in is the push the big boys do. The bankers, the hedge funds, you name it, blah, blah, blah. Okay, this is when opportunity first happens, and it's unknown in the market. No one sees it. Okay, no one sees it. Pulls back to a secondary push. This secondary push is like, you know, like I tell you guys in the stories of my webinars, that this is when a few pro traders or your neighbors are doing this, right? You know, the real estate boom, first stage, everyone, all the bigger players buy it, they make some money off of it. Second stage, some neighbors are starting to buy it and they're making money, some friends, some family. They're like, oh, okay, I want to do this too. And people step into the final stage. Okay, and this is now the 80% of the market. Same concept applies in forex. Is by this point, every single trading system and strategy, all their MAs, all their stochastics, all their MACDs, and all their indicators finally catches up, and it's like, hey, this is an uptrend. You should be buying it. Problem is, buying it from up here at these prices, you're late to the party. Because somewhere up at these prices, the market needs to crash before resuming. Have you guys noticed every time you guys even for me, every time, long time ago, I used to start getting into trade, it's like, I know it's an uptrend, but it always just crashes on me. It's as if like I have bad luck. You know, I used to feel like that. Like, why is it every trade I get in, I lose? You know, you ever get that feeling? It's because by the time our mental mind and the eyes grab on to the direction, it's too late. It's too late. Yeah, so same thing here, right? When you see this markets are going up and up and up, and then it blasts north really, really strong. It's around here when it blasts north really strong that everyone's like, oh hey, it's going up. So where do all the buys happen? Right here. All the buys are started to kick in right there, like, hey, I want to buy that. But what happens? It first will go down. It'll stop out majority of the people before resuming. Okay? Because we're under this assumption that this thing's going to go on forever. Okay? So always keep track of what the stage is. Okay. So back to the flow. Yeah, Jin, that's very, very correct. Price action is always the leader. And indicators, systems, strategies, all stuff generally follow the market. Yeah, they always follow the price. Okay, so quick recap, real quick on this, is all the technical stuff, everything that we've talked about so far, is any one thing incorrect? Okay, some of you who said this is a downtrend, are they incorrect compared to some who said this is an uptrend? No, they're both correct in this. So that's the problem with analysts. They're generally correct. Problem is when you bring it to trading, based on what you're trying to trade, one is going to be incorrect. Okay, if you're trading the smaller things on a daily, then all these things up here, then this downtrend is incorrect to you. Okay, makes sense? So it's all perspective. All right, let's clean it up. Okay, what are the 3 stages to the market? What's the stages to the market? We only have 3. What can happen in the markets? The 3 types. Up, down, sideways. Excellent. Good, good. I'm glad this is quick and fast. Okay, it's not guesswork. It's up, down, or sideways. That's it. Up, common knowledge, higher highs, higher lows. Down, same thing, right? It's inverse. Lower low, lower highs. Okay? And then range. Range comes in all sorts of designs. Either it goes completely flat, the ones we're normally used to seeing from textbooks. That's a range, like that. Okay, this can be a range when it's squeezed like that. Okay? Anything that stops you from saying higher highs or lower lows. Okay, it doesn't make any higher highs, it doesn't make any lower lows, range. Same thing here, doesn't make any higher highs, doesn't make any lower lows, range. Okay, so the market generally tends to be in a range state if it's not in a trending state. Okay, so the 3 stages are very important to first find out what needs to be done. So, again, these states are critical to understanding what you need to do. So, for those who are looking at a slightly bigger picture, who are trading a couple times a week, this is important. For those who are more immersed into smaller scales, this can be important. that we're in some sort of a channel here. Okay, just popping up and down. Right? Okay. How do we know when something is a downtrend apart from a higher high and higher low? When this goes high and it pulls back and then it goes higher. Okay, where am I expecting the next pullback to go to? Okay, previous high. Okay, it's got to be somewhere either here or higher, right? Right? Basically, if the move started from here to go up for this next push, it mustn't cross that. It can be anywhere, pull back to here, but it mustn't cross this guy. Otherwise, it's over. Right? That's one way to look at it. And would we say then, if that's the case, if it pulls back to here and then it goes up, is that an uptrend? If it pulls back to here, is that an uptrend? If it pulls back deeper to here, is that an uptrend? Okay, Adnan, that doubt, very good. Very good. Joseph, losing steam, very good. Very good. So it's not just because it's going in an uptrend flow that we lose track of how strong it is. Same thing happens in a channel. Notice how in this channel, does it respect the support and resistance as it goes down? Well, when it came down, it made this low, but wait a minute, it went through it, it went higher. Right? Does that mean it's no longer a downtrend? So you have to be aware of that scenario too, that an uptrend is not always at a high that keeps respecting support and resistance as it goes. It doesn't have to. Because an uptrend means as long as this is not disrespected, it can retrace as deep as it wants, and the trend can still continue. Okay? Now, the market moves up from here to here. Okay, try to stick with me here, okay? We're gonna now talk about power. Okay, we've covered quite a bit so far. It seems like we're talking still about the same thing, but there's more to it. That's the problem. We can't brush it off like, oh, you're still talking about trend. Oh my God. No. There's more to it. There's more to it. So we are aware that the first stage, when it went up, okay, how high did it go? Let's say it went up 100 pips. If this is 100 pips, in relation to that, how much did the second move go? 200, right? 200 or maybe 300, something quite a bit more than the first one. Okay, so would we say we have a lot more power on the second strength? Yeah. So aren't we expecting that, okay, looks like then we're going to get another push coming in. But then as the next, we're expecting another push to come in, this thing comes in very deep. Okay, the first time it retraced, for you fib guys, 50%. The next time it retraced, it's like 80-90% retracement. Right? So it's like, if the buyers are so strong, then how the hell did the sellers take it down 80% of the buyers? Are they really that strong? Or is this a faker to just make people start buying this thing in hopes of greed. Okay? So anyone buying up here, whoever's late to the party, gets crucified. And every time he tries to buy, thinking that it's still active, gets crucified and crucified and crucified. And then they're like, oh, maybe it's a sell. It just keeps going down very hard. And then they sell here, because now they're late to the party to the down move. Okay? But those of you who are on top of the perspective aspect of it, the market continues back up, you're like, ah, crap. So anyone selling down here now is the money that comes to all these buyers here. Okay? So it's always a game of you're winning because someone unfortunately got wrong-footed. Okay? Is your intelligence of reading the market is what keeps you profitable compared to those who are just trading emotionally. Like they see something, they're like, oh, I can't miss it. But they're not realizing the move started from up here and they're getting in here. It's like, that's way too late, buddy. Way too late. Okay? It's these people here. Okay, can we be most likely certain people are selling down here? Just because it had a strong red candle there? Oh yeah. Lots of trading systems, strategies, people, greed, everything starts pulling in sells down here. Thinking it's a lower low, the markets have moved down. But remember, the stages we talked about. The game began up here. Then came in the next stage. And then it comes in the final stage. Okay? But by the time the MAs or anything, for depending on what kind of trader you are, they all catch up to the move, it's death. Okay? So knowing that, knowing perspective is very important. Knowing when you're getting into the game is very also important. You don't want to get in too late either. Okay? So degree of movements on how much it pulled back. Is there still power? Important. However, if it does this, exactly like I drew it, and then it starts to do this, isn't that more like, okay, that's expected. After a strong move up, but then a very strong move down, it's like, yeah, I get why this is not going up so much. It makes sense. However, if this goes up like this, just a little bit higher, and then again it comes down, not at support resistance right here, but it comes down 80% again, what's happening now? Who can spot it? Who can spot it? The trend is ending, range. Who can spot it? Losing stream, double top, no. Uptrend ending signal. Bull and bears are fighting. I'm going to show you guys one more time now. But if I show you guys one more time, we're already too late to the game now. It goes up, and again it goes up slightly higher, and then it also retraces very deep, 80%. What's happening? Who can spot this? Joseph, excellent. Channel. Adnan, very good. Channel, uptrend channel. Okay, so it can be market losing steam up until this stage, up until that stage. Okay, up until here, it can be that, oh, what's going on? Maybe it's losing steam if it does that. But if it goes and slightly makes a higher high, and then it comes down and again retraces very deep, but then it goes up and makes a slightly higher high, it's like, okay, the uptrend is resuming, but it's doing it in a channel format. Make sense? So you need to be aware of the nature of your states as well. Okay? An uptrend is not only in one design of a higher high, higher low. This is also a higher high and higher low. It's just quite deep. And uptrend channels are basically like a tilted range. They're like a range, but angled, right? It's like a range like this. These are fun too, because you know exactly where to pull the triggers. Okay? All right, guys. Take it slowly. I'm pretty sure this webinar is recorded. Watch it. And make sure you get all this information down to you guys, to the bone. Okay? Understand it well before moving on to the next thing. Don't brush it off that, oh, I already know this stuff. No, don't do that. Make sure you get it down really, really well, this information, because these basics are the foundation of successful trading. Successful trading doesn't mean something ultra complicated and 6 million indicators on your screen. It means how well do you know the basics. That's successful trading. It's the key basics. Okay? All right, guys. So I just wanted to let you guys know a couple more things. I'm going to be in London next month and Brussels and Spain next month. And then I'll be in Hong Kong after that. For those of you who emailed me asking me about Forex Watchers, we got 3 more seats available. So those of you who want more intense training, our doors are welcome. You're welcome to come by and take some training from us. So thank you all for attending. I know it was an intense 45 minutes. Thank you so much for coming here. My email address is navin@forexwatchers.com. Nathaniel Sarpong, I'll be in London next month, early next month, September 5th, maybe? September 5th, September 6th. MD Sabir will do webinars for entries for sure. For sure. We'll as we get close to it, maybe I'll make it a three-part session for this thing. Arnold, when in California, no plans of the US yet. Okay, we just did a seminar with FXStreet in Toronto. I think I'll be doing a seminar in person probably in Barcelona next. So, but I want to say thank you one thing, guys. You guys, for the last, 12 months or so, you guys have made my webinars #1 again and again and again. So, I understand the material is good too, but it also helps you guys to, support and stuff. So thank you so much for making us #1 again and again and again. So, all right, guys, thanks a lot. Hopefully to see some of you guys at Forex Watchers as well. If you guys can definitely afford it and have the time, go for it. I tell you, it's more hardcore. Okay, until next month, guys, for the next stage of the recap. Take care. Thanks, FXStreet, for having me. Bye for now.